Hi everyone, welcome back to Be Rich. Happy Sunday, Sunday evening. I hope you had a wonderful weekend and you enjoyed the air show. Those of you who are in Chennai, the 2 days of air show we had been rather noisy for those of you who are staying close to the beach, but it was quite nice to watch our Air Force showing the strength of our Air Force in the sky. That said, today me and Shashwat are here to talk about IDFC and how to spot these kinds of arbitrage and how, as an investor, you place bets, and sometimes it can work out quite well and quite beautifully if you know what you're doing. So, to talk about that and IDFC, and also compared to Tata Motors, and generally about arbitrage and why it's a long game, I thought I'll ask Shashwat to explain this to you. Okay, Shashwat, let's jump into it.
Yeah. The first thing which we should know about making bets on special situations like mergers or takeovers or delistings or relistings, the important thing to know about it is that there is always an element of luck involved in it. Because at the end of the day, the reason why people get into such events is because you're hoping that things turn out likely to in the way you want it to turn out. So there's this element of not knowing what's going to happen, which is true with all of investing, but more so with special situations where you don't know whether the merger is going to get approval. You don't know whether even your shareholders are going to approve the idea of a merger. Then the regulatory body approves your merger, and then if all those things check out, then all the bureaucracy surrounding a merger has to fall into place. You have to get the money ready, you have to get the swap. So there's quite a bit of work that goes into such a process, and there are many pitfalls on the way in which something where a delisting or a relisting or a merger can just go wrong. It can fall flat on its face, and your gamble would have been for nothing. So there are many pitfalls and roadblocks to these special situations. However, as investors, if you get it right, if you can call the coin right, then you do make quite a bit of money over a few years rather than a few decades. So instead of waiting for a few decades, if you're able to call the coin right, you might make it over a few years instead, as in the case of the IDFC merger. But before we get into the IDFC merger and how the events have unfolded, I want to basically talk about how one can make an educated guess when it comes to these special situations. So, the important thing with special situations is that it's difficult for us to really get a roadmap of how and what the specifications of the special situation would be. I use the word educated guess because that's the only thing we're able to do as investors when such special situations roll around. There might be a few people who are fearful of getting into it, and that's when, if you can make an educated guess on what the situation currently is. It's a good company, it has good cash to debt ratios, it has a good net interest margin, they have a healthy balance sheet. Then okay, then maybe you can justify getting into such a bet, because even if the bet falls flat on its face, you're happy holding the company that's underlying the bet. So a similar example of this was TCS. When TCS decided to do a stock buyback, we didn't know the ratio. We didn't know what kind of ratio TCS was going to give out. But we did know that TCS is a good company. It has great free cash flow. It's spilling out with money. Its reserves are great. Its debt is very low. And even if the buyback didn't go through, for in my case, I tried to go for the buyback, and the ratio fell one short of what I had. So I bought 5 TCS stock, but the ratio was 1:6. So the bet didn't go through for me. But regardless of whether or not the bet went through, in the long run, my TCS stocks have appreciated by quite a bit, just because it's a wonderful company, and the general stock market is doing quite well today. So the point of this was to basically tell all of you at home that even if such a bet were to fall flat on its face, you should have a contingency plan where you are happy owning the company that's underlying the bet. And I'm happy owning IDFC or IDFC First Bank. So let's get into the bet. So back in 2022, we got a whiff of what a merger was incoming, where IDFC and IDFC First Bank were said to be merging, and there's another third entity which was also said to be merging, but that didn't, I guess, didn't happen. But IDFC First Bank and IDFC were merging, and back then they hadn't gotten shareholders approval yet, and let alone regulatory approval. That's much further down the line. And I think around 2023 they got shareholder approval, and then they applied for regulatory approval as well, and they came out with the ratio of 155 IDFC First Bank stock for 100 IDFC. And if you had bought IDFC when such a merger was first announced, you must have made a huge killing just in terms of stock price appreciation, because of course the general market has done well too. And there was an arbitrage which was to be made before. That arbitrage does not exist now. The record date I think is October 10th, and the ratio stands at 155 First Bank to 100 IDFC. I think at the moment we're talking right now, the arbitrage is 2%. I mean, if you consider brokerage of zero point 0.1, you're going to be eating into any minor arbitrage you can make out of this. So I don't know whether it's worthwhile getting into it at this point. But back when this was announced, and if you had bought it, then there was quite a bit of money laying on the table. Of course, it's not free money. It was a gamble, of course, because the bet could not have gone through. It could have possibly been that the merger was called off, the shareholders didn't ratify it, or the regulatory body stepped in the way and said, look, we can't allow you to merge. There could have been a lot of different cases, but the merger did go through, and the record date is on 10th of October. So anyone who owns 100 IDFC by the 10th of October will be getting 155 IDFC First Bank. So that's where it stands currently. What do you have to say about this entire situation?
You rightly said. There are times in history when the arbitrages have worked. There have been times when it also didn't work. Anand famously has always spoken about Syntex and what happened in Syntex. There was an arbitrage there, and we did try to ride it, and sometimes it doesn't land the way you want it to. But you always have these opportunities in the market, and if you look at them, you get to grab them. And looking forward, okay, those of you who missed IDFC, who felt like you didn't have an opportunity in IDFC because whatever, at the time you were just entering the market, you didn't know about stock market, you just came in now and you saw this whole thing and you felt left out. There are opportunities still there in the horizon. And like Shashwat rightly said, these things can blip and disappear. Like, for example, Manappuram. They spoke recently, it made news. The company was talking about removing Ashirvad and floating it as a separate company. It was pushing the share price up because of that expectation, because if a split happens, you get two companies for the price of one. Now, the CEO has come out saying the market is not conducive. He feels it's not right for the launching the new company, and he feels this IPO may not work out, so he's withdrawn it. So immediately there's been market sentiment around that too, which has led to price, one of the contributing factors for the Manappuram price correction. Same way in Tata Motors itself. The Chandrasekhar has come out and said he wants to split the company in two, passenger vehicle and commercial vehicle, and then you have Tata Capital in it and Tata Technologies. You have various plays inside Tata Motors. So there is an opportunity there. When it's going to happen, how it's going to happen, we do not know. But if you have faith in it, you can, and you have the appetite for that risk. And like Shashwat says, at the end of the day, you still own Tata Motors. If none of it comes to fruition, you're left with Tata Motors in your hand. If you're happy with that, then there's something for you to consider. There's another one coming in, ITC. ITC and ITC Hotels is another one which is going to be happening. So, there are opportunities. But the thing, like he said, you should have the courage for it, and you should be okay with, if it doesn't pan out, whatever's left in your hand, you're happy holding it. That is the most crucial thing to remember here.
Yeah, and I mean that's true. There's no guarantee that any of these bets will go through. So please don't take this video as an endorsement to go out and start looking for these opportunities and solely do your investing in these avenues, because this is more of a shot in the dark than anything. So I'd suggest that those of you at home should be doing your regular type of investing, which is indexing, or for those of you who are more enterprising, finding value buys. This is something you can look for on the side, and if you find a really good opportunity, you can try to go for it and see what comes out of it as a learning exercise. But in general, please do make sure that the major chunk of your investing is done in the proper fundamental analysis avenue, which is basically value investing or indexing, whichever you want to do. Please do that, and please do it in the Tiffin Coffee range, as we keep saying on this channel. And please be careful out there, because investing is not a very easy thing to do. We understand that there's a lot of pitfalls which a lot of investors don't see ahead of time. So please keep this in mind. And if you did miss out on this opportunity, please don't have FOMO, don't suffer from fear of missing out. There will be many more opportunities. And as there have been many opportunities, there will be much more in the future. As the Indian market size keeps getting bigger and bigger, more of these opportunities will pan out to the point where you should be seeing such opportunities dime a dozen. So I would not worry about that.
Yes. With that said, I think that was a very positive endorsement from Shashwat about staying, in your lanes, in your circle of competence. And we wish that you have a great week ahead. And if you do corrections in the market, like we saw last week, when those corrections do happen, please invest in Tiffin Coffee range. We are nowhere near any major correction, as I say. Though I say correction is really not a correction. The index is not even down 4%. So it's not anything dramatic, though we may feel dramatic because we have been in such a lull because of these bull runs. Please understand these are very small reactions in the market. The biggest one which will come if whatever between Iran and Israel transpires into something ugly, then we will see some major shifts in the market. If they hold the status quo as it is right now, the market will continue doing what it's doing currently. So keep your ranges in Tiffin Coffee. Don't go exploring beyond that. And if you do, you might run yourself into some trouble. Anything else you want to add, Shashwat, before I sign off?
Yeah, we're not investment advisors. None of this is investment advice. We're basically just doing it for educational purposes, and we're discussing ideas which we think are important. And we thought that we could record it and put it up for all of you to watch, to see what we discuss about. Please do consult with the SEBI registered investment advisor before you make any investment decisions. And we hope you have a good week.
Yeah. So thanks for watching the video. Do like and comment below what else would you like us to talk about or explore in terms of arbitrage, any companies you think we should be talking about. That said, see you in the next video. So thank you.
Thank you.
Hey guys, welcome back to Be Rich. Before we get into the video, I wanted to bring to your notice that my uncles VinodSrinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog/newsletter where we're going to post our original research onto it. And we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu, and these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it. And please give us comments and feedback on what you read. Thank you.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.